It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday. A new record. U.S. stocks hit an all-time high as a tumultuous first half of the year comes to a close. Deals take shape just 9 days to go until President Trump's trade deadline. Negotiations continue from Canada to Japan. And the Senate about to kick off a marathon voting session on the president's tax bill ahead of July 4th. Well, it is an all-time high. It is a shortened holiday week, and it is the last day of your trading for this, what has been a roller coaster of a first half of the year. Who thought after all of that we'd be at all-time highs? But yes, it is the NASDAQ leading again, up 0.5%, S&P on track for another record close this session. Meanwhile, bond yields, those also come in, trading just about at the lowest level since the start of May. We're down by about 2.5 basis points for both your 2- and 10-year yields. Some big risk events to look forward to this week. We're going to get jobs on Thursday brought forward because of the holiday, but that holiday, July 4th, is the tax deadline for the United States. Let's look at the stocks under the surface. With your stocks to watch this morning is Joe Easton. Hey, Joe.
Hey, Danny. So we have got some weakness in the renewable energy stocks today. So I'm talking wind and also solar as well. There is a tweak on the Senate bill relating to tax credits over the weekend, potentially meaning these tax credits could end by 2027, so actually sooner than expected. And that is weighing on that renewable energy space this morning. Keep an eye on those stocks in the early trading. Then over in the other shares, I'm looking at Disney. This one gets an upgrade over at Jefferies today. It's all about Disney World doing better. Everyone heading off to Disney World over in Florida for their holidays, and also the slate for Disney looking better. Avatar 3 coming out. This is why I love covering US stocks, because we get to learn about the new films coming out. Avatar 3 is going to be a boost for Disney, according to Jefferies. So they upgrade the stock today. And then finally, keep an eye on Juniper Networks, because the DOJ has actually settled a lawsuit around the takeover by HPE, Hewlett-Packard. They won't have to go to trial now, and therefore that is positive on that takeover going through. It's up 9%. And keep an eye on the before the bell opening wrap on the terminal for more of these movers and more, Danny.
Joe, thank you so much for that roundup. We'll catch up with you later in the hour. Also in this hour, in just moments, we'll be speaking to Jane Foley of Rabobank on the market's reaction to the upcoming tax bill vote. And later in the hour, Matt Gertken of BCA Research on the looming tariff deadlines. A lot of deadlines this week, and the Senate's version of President Trump's tax bill, the so-called One Big Beautiful Bill, would add more than $3 trillion to U.S. deficits over a decade. That's according to the Congressional Budget Office. Rabobank's Jane Foley weighs in with senators set to vote on the legislation in the next couple days. She writes, quote, despite the better tone in treasuries, the market cannot escape the forthcoming vote in the Senate regarding Trump's mega bill on fiscal policy and associated concerns about the sustainability of the debt mountain. Joining us now is Jane. She's the head of FX strategy at Rabobank. Jane, great to see you on this Monday. A holiday week, but a lot coming up. Is the market prepared? To what degree is growing deficit concerns priced or not priced in?
Well, to be honest, I think some of the attention from the impact on the deficit, the debt, has been sort of watered down a little bit by this perception that perhaps growth in the US isn't as bad as people had feared. Now, clearly, we should all be worried about deficits. We should all be worried about debt, and that goes for a number of countries. But when growth is doing better, well, we need to be a little bit less worried. And right now, I think we look at the optimism with respect to the US stock market, for instance, over the last few weeks, and it does appear that some of that focus has shifted a bit. And that really is quite interesting, because all year we've been talking about this diversification trade from the US, a movement away from US assets of all types. And yet, in June, we've seen that sort of trade a little bit more confused, with the stock markets outperforming European stock markets quite substantially in June. And that, I think, raises a lot of questions, perhaps puts a lot of fog over the outlook for US assets for the remainder of the year.
Jane, if you are seeing that fog come back, as in the U.S. exceptional trade ending isn't as clear cut, why isn't the dollar doing better then?
Well, that's exactly the question. Now, look at the stock markets. You've seen the Europeans lag the US over the course of June, and yet the euro is outperforming the dollar still, quite obviously. And that raises the question, well, which one is going to give? Now, I think perhaps there is a lot of optimism in the euro. We are likely to hear Lagarde again at Sintra talk about the opportunities for the euro as a reserve currency. So we are likely to get even more of that vocal optimism. But if we don't get the data coming through for Europe in terms of the economic data and also the earnings data for the stock market, then we've got to ask, is there just a little bit too much optimism in the price right now? Do we need to see some backtracking, perhaps in favor of the dollar, in order to really adjust this and take stock?
Well, if you look at some potential drivers of continued weakness, Jane, there's been a new bout of dovish Fed speak, let's say, with Mickey Bowman joining the fray of Chris Waller. The economic data does suggest that inflation has been tamed, and maybe some of that diversification trade still ongoing. Jane, what does seem to be the biggest driver of dollar weakness at this moment?
Well, I think right now it is really the Fed. That the market had been thinking, the Fed going to be more worried about the inflation aspect or the growth aspect. The market was, very split upon that. If it was worried about the inflation aspect, we'd have less easing. If it was more worried about the growth aspect, we'd have more easing. And certainly over the last week or so, the market does seem to have shifted and think, that the Fed is going to ease. And that, of course, that optimism about easing really supported, really injected by the comments that we had from Trump on Powell, really quite recently, just about a week or so ago. So the market is very optimistic about the prospect of interest rate cuts. I think that is also a risk. It could be that the market's just priced in too much. It's certainly our view here at Rabo that the market is priced in too much in terms of Fed easing. And if that reverses, or even when that reverses, that could also be a trigger for a little bit more gains, or a little bit of backtracking, shall I say, in the value of the USD.
Jane, the other thing that you and the team have been writing about, I think is really interesting, just looking at some of your research from earlier last week, you talked about how the NATO summit ended on a more congenial tone. And then you also had the U.S.'s participation in Iranian strikes, which leads us to a U.S. that doesn't seem as isolationist as maybe it did at the outset of Trump's presidency. Is all of that also dollar positive?
I think if we step back and look at the big picture, well, yeah, it really should be, because again, one of these big themes that people have been talking about this year is the isolationism, the reinvigoration of U.S. isolationism, which has been around, since Washington, been around for a long time. So a reinvigoration of that, what is that going to do to U.S. hard power? What is that doing to U.S. soft power around the world? What does that mean for the U.S. as a reserve currency? So these have been some of the sort of big themes that have been kicking around, for months now. And yet, because we had the U.S. participating on those strikes just over a week ago, we do, and because of that tone, of course, in NATO just last week, then maybe that the U.S. or Trump, I should say specifically, his brand of U.S. isolationism perhaps is not as extreme as we had indicated, as a consensus just a few weeks ago. So that could be something that really does, so to speak, or pan out in the broader picture over the next couple of months.
Jane, should that also fuel some optimism that as we approach that July 9th trade deal deadline, that more positive outcomes will come from it?
Well, I think there is a little bit of optimism over the past few days. I mean, certainly over the weekend, there was a little bit of concern and then relief about the potential progress with Canada. But we've also seen some Trump officials indicating that we could have some deals done with quite a few of the US's trade partners, by that July 9th deadline. The EU is clearly a big one. It's very difficult to tell how those trade talks are really progressing now. And we did have the French finance minister suggest that there may be a need for an extension of that deadline, although this morning the comments or the political comments that we're seeing are perhaps a little bit more reassuring that there might be something done by July the 9th. It would be really nice to hear a little bit more in terms of content of that trade deal, and hopefully that will be the case by July the 9th.
I think we're all looking forward to getting any details. Jane, thank you so much for starting the week with us. Always a pleasure to have you on. Jane Foley there of Rabobank. Let's get you now some other stories that are trending on the terminal this morning. President Trump says that he has identified a buyer for the U.S. operations of TikTok. but did not identify the winning bidder. He spoke to Fox News about the potential sale.
We have a buyer for TikTok, by the way. I think I'll need probably China approval. I think President Xi will probably do it. Very, very wealthy people. It's a group of very wealthy people.
And the Senate is poised to approve a controversial provision preventing some states from regulating AI for the next 5 years. The initial provision was for 10 years. The measure was a top priority for tech companies like Microsoft and Meta. Meanwhile, ING cutting 230 jobs, saying that they have, quote, too many senior roles. Focus will be on its wholesale banking division. The restructuring will be split proportionally across locations. Coming up, trade talks gain momentum as President Trump's tariff deadline nears. We're going to have the latest developments coming up next on your Bloomberg Brief. You're watching Bloomberg Brief on this Monday morning. I'm Danny Berger in New York. Canada has dropped its digital services tax on tech companies such as Meta and Alphabet in a move made to restart trade talks with the U.S. Last week, President Trump said the U.S. holds all the cards in negotiations.
Canada's been a very difficult country to deal with over the years. We hear Canada, we have a great relationship with the people of Canada, but it's been very difficult. And they put a charge, and they were a little bit early. We found out about it. So, and we have all the cards. We have every single one. We don't want to do anything bad, but they have economically, we have such power over Canada.
Canada says the two countries will work towards reaching a deal by July 21st. For more, we're joined by Brendan Murray, who leads Bloomberg's trade coverage. Brendan, to what degree is this just instructive of how aggressive and how much pressure the Trump administration will be putting on nations as we reach the deadline for reciprocal tariffs?
Yeah, exactly. We're coming down to the real crunch time now with just 9 days to go until the tariff deadline. This move by Trump to target Canada's digital services tax is just another reminder of how wide the arsenal is for him to threaten countries and put leverage on countries to do the deal he's looking to do with them. There are other countries in Europe and Asia, in emerging markets, that either have proposed digital services taxes or have them already in place. So you have to imagine that they're waking up in capitals all over the world going, we better have a plan B for our digital services taxes. If this is a reminder from Trump that he really despises this measure, and he will use it in these trade negotiations.
Brendan, I mentioned there that Canada said that they hope to have a deal by the 21st of July. We also heard from Treasury Secretary Scott Bessent on Friday saying that he hoped we'd have deals by Labor Day. How real is the July 9th deadline?
Yeah, it seems like it's pretty flexible. The president said that he could push it back, he could pull it forward. It's kind of all over the place. We don't really know exactly how many deals they're going to wind up with before Wednesday of next week. It could be anywhere from 5 to 12, maybe, given the information that we're getting from the administration. But the bottom line is, as we report today, these deals are going to be pretty thin. They're going to be framework deals that cover a few of the major issues, and it leaves the more contentious measures, the ones that need to be hammered out over the next weeks and months to deal with at a later date. But President Trump has said that he wants some of these deals in the books by July 9th, and you can imagine his Commerce Secretary, his Trade Representative, and Treasury Secretary are going to try to deliver on that in some form or fashion.
I mean, you can only imagine how busy the next couple of days are going to be, Brendan. But Trump yesterday, speaking on Fox, saying that, look, we'd make deals, or I could just send out letters, something he said before, just send out letters assigning tariffs to various countries. What could that potentially look like?
Well, that would just put the heat on these countries to come back with a better offer. If the tariff on the European Union, for instance, goes from 20% to 50%, that's going to put an immediate squeeze on the EU economy and disrupt all sorts of businesses that trade between the U.S. and Europe. So if the president feels like these countries haven't done their part to negotiate in good faith, he said that he will follow through and put these higher tariffs on their imports But you got to imagine that countries are racing to figure out where they can find a deal, or at least buy themselves some time to work this out over the summer into Labor Day, as the Treasury Secretary suggested.
Hey, Brendan, I have no doubt we're going to be talking about this all week. Thank you for joining us. We'll also catch up with you hopefully later in the hour. Brendan Murray of our Bloomberg trade team. Now, elsewhere in D.C., President Trump's so-called big, beautiful bill still facing competing demands ahead of the president's deadline.
We would still like to meet that July 4th self-imposed deadline, and the president likes that idea. I certainly like that idea, and so does Leader Thune.
But first, Majority Leader John Thune has to work through a list of approximately 8 senators of the Republican Party, with a vote happening today at 9 a.m. Eastern. Joining us now from Washington is Bloomberg's Kasia Klimanshinska. Kasia, where do the sticking points still remain to get this bill done?
Good morning. It was another busy weekend here in Washington, D.C., with Senate Republicans working all Saturday and Sunday. They took a short break, I guess, to catch a nap, but they will be back at 9 a.m., as you mentioned, voting first at the amendments, and the big final vote can happen late tonight or early tomorrow. But as you said, there are still sticking points. Republicans have only a relatively narrow majority in Senate. They have 53 Republicans there, so they can only lose 3. And 2 already said that they pretty much oppose the bill. One of them is Rand Paul of Kentucky, who obviously doesn't like that this bill contributes $3.3 trillion to the nation's deficits over 10 years. And also the bill has a $5 trillion increase of debt ceiling in it. So that's why Ron Paul said he will vote against it. There are other Republicans. Some of them don't like the cuts in spending to healthcare. Some of them actually think that there are not enough cuts in spending in this bill.
To that point, I mean, we heard from Tom Tillis announcing his retirement over the weekend, and then goes on the floor and slams the GOP tax bill, essentially saying that it's an artificial deadline and doesn't like the plan for Medicaid cuts. Just how steep is the road for Johnson to try to collate some of these Republicans? What sort of horse trading needs to happen, Kasia, in order to get them on board?
Yes, so remember, this bill has already passed the House once by just 1 vote. So we'll probably see another very narrow margin in Senate. And we know that Vice President J.D. Vance was on the Hill over the weekend. He's ready to come in and, cast the vote to break the tie. So we'll see. But also we had the world's richest man, Elon Musk, speaking again against this bill over the weekend. So that obviously doesn't help.
Yeah, Kasia, just on that, it seemed like some of the industry was quite stunned with the new tax on wind and solar projects. What did we hear from Elon Musk and others?
Yes, exactly. So Elon Musk said that this bill is very destructive. Previously, I think he focused on the impact on deficits, but this time he pointed the impact on industries. He said this bill supports the industries of the past while hurting the industries of the future. Obviously, one of the industries he was thinking about was electric vehicles. This bill, the Senate version, is very aggressive. It takes away the very popular tax break for EVs for individuals.
And we've already seen some of those renewable energy stocks decline in the pre-market trade. Kasia, thank you so much for joining us this morning. Kasia Klimanshinska in Washington. Coming up, we're going to take a look at some of the top headlines around the world. Stay with us. This is your Bloomberg Brief on this Monday, sunny Monday morning. You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you some front page news. Here's what's making headlines on the top publications. The New York Times has this. Republican Senator Tom Tillis announces that he won't seek re-election. President Trump had threatened to back a primary challenger against the North Carolina senator because of his opposition to the tax bill. The decision could help Democrats flip the Senate in the 2026 midterm election. Next up on the Journal, Republicans declare the extension of 2017 tax cuts as, quote, free. They're saying the extension will have no effect on the federal budget. Senate Minority Leader Chuck Schumer called the move fake math and accounting gimmicks. And on the FT, U.S. shoppers are ditching Shein and Temu. That's after President Trump closed a tax loophole. Temu's monthly active users plunged 51%. Shein saw a 12% drop. And as we head to the half hour, U.S. stocks continue to head higher. We're on track for another record close today, but it is a dollar that keeps weakening. We're talking to Jane Foley about this, breaking the trend of U.S. assets getting attractive, but the dollar not playing along. Coming up, trade talks make progress. President Trump's deadline looms for tariffs. That comes July 9th. Tax deadline, that comes July 4th. We'll discuss all of that with Matt Gertken, Chief Geopolitical Strategist at BCA Research. That's coming up on your brief. You're watching Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday. A new record, U.S. stocks hit all-time highs as a tumultuous first half of the year comes to a close. Deals take shape just 9 days to go until President Trump's trade deadline. Negotiations continue from Canada to Japan. And the Senate is about to kick off a marathon voting session on the president's tax bill ahead of a July 4th deadline. The last day of a roller coaster of the first half, and we are ending with all-time highs on the equity market. Those gains continue this morning. The Nasdaq outperforms, both up around 0.5% this morning. You're also looking at declines across the bond market. 2-year yields, 10-year yields, all of those around their lowest since the start of May, down by about 2.5 basis points this morning. 4.25 on your 10-year yield, but it's going to be a busy week. It is a holiday shortened week. We're going to get jobs day on Thursday, 113. 1,000 is the estimate for the jobs day, and then the next day after that, on the July 4th holiday, is the deadline for the tax bill. Let's look at what's moving underneath the surface. Here with your stocks to watch is Joe Easton. Hey, Joe.
Hey, Danny. So we've got renewable energy stocks sliding in the pre-market today on the latest update to the tax bill over in the US. The Senate over the weekend announcing a potential tweak to the bill, which will see tax credits end by 2027. So that would be sooner than expected. So we're seeing Sunrun down around 2%, Enphase dropping 4%. NextEra as well. That's a $100 billion company. That company seeing the shares weakening today. Then over in the entertainment space, Walt Disney getting an upgrade. This is mostly due to the parks business, which is seeing better traffic than expected, according to Jefferies, and also the slate on Disney Plus looking stronger. And the new Avatar 3 coming out in December. The analysts over at Jefferies getting very excited about that one. That is why I like covering these US stocks. Get to hear about the latest films coming out. Avatar 3, keep an eye for that one. Then over in telecoms, Juniper, this one rising as the Department of Justice settles the case related to HP Entertainment's acquisition, HP Enterprises' acquisition of the firm, and therefore this deal more likely to go through. So Juniper gaining around 8% in the pre-market. Danny, HPE was slightly higher as well. Keep an eye on those two as we head towards the open in New York.
Joe Easton, our movie theater correspondent. Thank you so much for your work this morning. Really appreciate it. All right, back to one of our top stories. Canada has dropped its digital services tax on tech companies like Meta and Alphabet in a move to restart trade talks with the U.S. Last week, President Trump said the U.S. holds all of the cards in negotiations.
Canada's been a very difficult country to deal with over the years. We hear Canada, we have a great relationship with the people of Canada, but it's been very difficult. And they put a charge, and they were a little bit early, we found out about it. So, and we have all the cards. We have every single one. We don't want to do anything bad, but they have, economically, we have such power over Canada.
Canada says the two countries will work towards reaching a deal by July 21st. For more, we're joined by Brendan Murray, who leads Bloomberg's trade coverage. Brendan, it was a blink and you miss it spat. Where do we stand on negotiations between the U.S. and Canada?
Yeah, this was a reminder that as we head into these final 9 days of negotiations, Donald Trump can end talks just as easily as he started them. He said there that that the U.S. holds all the cards over Canada. That may be the case, but when it comes to a relationship like the U.S. and China that we've seen over the past week or so, President Trump may have some cards, but China has all the rare earths. So there is some room here for other countries to negotiate and to try to use their leverage over the U.S. But in this case, we saw that President Trump basically turned that digital services tax, turned it right around within a matter of a couple days. That will be another reminder to other countries that are negotiating that anything is on the table and that things can change very quickly.
How confident is this administration, Brendan, that it can get the deals it wants done by July 9th?
There seems to be some confidence that they can get a few of them over the line. There are talks with India that the president has said he's very optimistic about. We've heard them be more optimistic about the European Union and countries in Southeast Asia like Vietnam and Indonesia that could be close to deals as well. But there are others that sound like they're less sure. South Korea and Japan are among those that are facing not only the reciprocal tariff increases, but the big sectoral tariffs on cars and steel and aluminum. So the talks are getting very complicated here in the final days. You don't put your best offer on the table until the very end, and we're still not at the end yet where the best offers have come forward. So the administration will want to rank those that they see as the best. Those will get over the finish line by July 9th. Those that they say aren't as good as they could be, we could see some delays or pushing back of that July 9th deadline.
Yeah, it sure feels like we're far away from the end. Brendan, thank you so much for your work this morning. Brendan Murray. Now, Matt Gertken of BCA Research says now is the time to play defensive. He writes, quote, global financial markets face a new bout of volatility this summer as the Trump administration tries to renew tariff implementation. The shock may not initially be as bad as in April, but this time the real economic impact of tariffs will start to be felt. Matt joins us now. He's the chief strategist for geopolitics and U.S. policy strategy at BCA Research. Matt, so great to see you. Thanks for coming into the studio this morning.
Well, thank you for having me.
A lot to impact there, but I guess just on the basic level, it's a market that feels sanguine that either will get trade deals or it will just be can kicking. Should the market be so sanguine?
Yeah, definitely not. Trump still has an interval where he can push this coercive diplomacy. I think the markets feel more confident that he's aiming to get deals done. It's very clear across ceasefires and trade deals that this is part of the art of the deal. And so from that perspective, the financial markets want to just climb the wall of worry. And they will do that. But in order for the negotiating leverage to be successful, he's always got to surprise people. He's always got to present negative surprises. That happened with Canada just now. We see the Canadians having to sort of compromise immediately. But what we'll see is him pushing on and rotating between different countries. As usual, China ends up being the really tough nut to crack. They are effectively willing to deal because their economy is weak also. But in order for the negotiation to work, he's got to make it look like it's going to have some pain involved.
Right. So that unpredictability really a feature of his trade negotiations. But at what point is that damaging versus a market that can look through it? This idea that, yes, what he puts out there first is kind of the art of the deal. It's the first volatile thing he does, but he'll always backtrack from that so markets can look through it. So can they look through the most extreme things that he puts out there?
Yeah, generally, yes, because they, as long as it's theater. But then what happens is we actually start to get the implementation of tariffs and we start to see the data change. Like import prices have been going up and consumer incomes have been slowing down. We see a fall in job openings. Young people are having a really hard time getting work. And of course, it's also hard to get credit right now. So not only have consumers spent their excess savings, but when they try to go get a loan, they have higher interest rates to pay. So all of these things mean that there's an underlying weakness to the U.S. economy, and his successes at the theater could actually be very misleading for him. It's a dangerous time in which he could be emboldened, particularly because, in general, I think his agenda has been moving along pretty well and he's gaining momentum. But that means his confidence could lead him to push harder than the underlying economy can withstand.
But I think that point is so interesting because in the first half of this year, the negotiations have taken place with an economy that's looked resilient, that's looked strong, maybe a little bit weaker at the margins. But if this next round of negotiation happens, when you're getting real-time data in that does suggest that there is weakening, is it a market that will push back against Trump? Is it a Trump that will be hamstrung because of some of the underlying weakness?
I think it ultimately will, yes. First of all, the key thing that we're seeing now is a confluence of Congress passing, the One Big Beautiful Bill and President Trump going back to implementing tariffs. And what will come out in the wash is that the stimulus from the bill, which is, maybe a 1% of GDP fiscal stimulus next year in 2026, that's just going to sort of offset the negative effects of the tariffs. Also, the tariffs will take effect, in the second half of this calendar year, whereas really, the positive effects of the stimulus will be more next year. And so the problem there is that we'll start to see these negative effects, and you won't really see an acceleration of the economy in the way that maybe the Republicans saw in 2017 when they did the initial tax cuts. And so from that perspective, I think, in fact, we will have to find some other source of demand to make the markets feel more satisfied. But the global economy is actually quite weak. Exports are suffering from the trade war. And that will only get worse as we see effectively a large, 10% or more increase in U.S. tariffs.
I was speaking with Jane Foley of Rabobank earlier in the program, and she made this argument that when you take account of what happened after NATO, that it was a pretty congenial NATO, nothing really, fireworks came out of it, and the U.S. that was willing to participate in the Iranian strikes, is that it's a U.S. that's less isolationist, and that should also give markets comfort. Do you get the same read from what we've seen over the past 2 weeks?
I mean, first of all, I never really bought the argument that Trump and his team were isolationist. I always thought that was a little bit of hyperbole. But certainly they were looking to retrench U.S. involvement in every, or let's say micromanaging every issue globally. They wanted to remain offshore and revert to historic U.S. sort of naval power and air power. But what we saw is that President Trump is willing to take action. So there's a credible threat that's been reestablished, and that's important for the Middle East. And it's important for other dynamics, although we still haven't fully seen those play out. So, for example, the president agreed with NATO, and it was very important that he would uphold collective security. But Russia may very well test whether that's the case. Just some sort of provocation against NATO countries to see whether President Trump is willing to defend every inch of NATO the way that President Biden said he would. And that could introduce a bit of a scare if the president hesitates. And that would undermine the faith in NATO. Also, with China and Taiwan, we'll see some testing of boundaries. Even as the trade talks are going on, there'll be a testing and there'll be an attempt by China to coerce Taiwan. So I think he does have some pretty big hurdles to go through, but he handled the Iran situation relatively well.
Well, you did write in your notes that ceasefires are never reliable. And going forward, there's still a 50-50 probability of one or several minor oil shocks going forward. It's a market that's looked through it, though.
Yeah, it has looked through it. Well, here's what I would say. First of all, minor oil shocks in general should be looked through.
Right.
And so the risk there for a while was that we would have a major oil shock, basically that the Iranians would retaliate against regional oil production, and then the U.S. would retaliate against Iran, and the whole thing would escalate. We pretty much dodged that. I mean, it could still happen, but the probabilities have fallen sharply. And so that leaves us in a zone where, yeah, minor shocks can happen, and they can happen for various reasons. But, it'll be a fleeting impact on the oil markets. And that, again, that's a really positive thing for the president, also for the Chinese economy and the European economy. So we have dodged, for now, the oil shock risk that I think was one of the bigger macro risks for this year.
Matt, just before we let you go, July 4th tax deadline, does Congress get it done in time?
I don't really think so. I mean, we're in the tactical moments now. We're in the trenches, but they've still got to get the House to agree. And the Senate bill has been a little bit more profligate than the House bill. So now those sort of fiscal hawks in the House will be the key bottleneck. And I think that's going to take a little bit more talking. But probably by the time of the August recess, they'll get it done.
So at least at some point in the summer, we'll have something. Matt, thank you so much for joining. This was so wonderful. Please come join again soon. That is Matt Gertken of BCA Research. Coming up, more on that one big, beautiful bill. Senate Republicans still torn. The voting set for this morning. We're going to have more on the deadline coming up next on your brief.
The yeas are 51, the nays are 49. The motion is agreed to.
The Senate may have been successful restoring major Medicaid cuts to President Trump's signature economic legislation, but it's a long road ahead before the July 4th deadline. Joining us now on that road ahead is Bloomberg's Kasia Klimanshinska. A long road, but the deadline is fast approaching. We're just speaking with Matt Gertken of BCA Research, who says that he doesn't think that they'll reach it. Where do the sticking points still exist, Kasia? How likely does it seem that they can get a deal done by July 4th?
Good morning. I'm not sure I agree with Matt. I think this deadline, although artificial, it was set by President Trump, and the Republicans will try to get there. This bill represents almost entire Trump's domestic agenda. It has $4.5 trillion in tax cuts. It also has increased spending on defense and on immigration enforcement. So I think Johnson is working as we speak, trying to make sure that he has enough votes. The voting will resume at 9 a.m. I think the final vote in the Senate, anyway, will happen either tonight or early tomorrow morning, and we'll see. But I think he will get there.
What about these individual points, Kasia? Things like Medicaid, things like budget expansion. Just how big of a fight are congressional leaders gearing up for?
Exactly. So there are about 8 Republican senators who oppose the bill now, but they oppose it for different reasons. So there are some Republicans who actually say the cuts have gone too far, especially the lower spending for healthcare in rural areas. That's something they don't like. They would like to restore some of this spending. But on the other hand, you have people like Senator Rand Paul, who thinks, this bill is is increasing deficits already too much. It's increasing the debt ceiling by $5 trillion. So he says he will not vote for that. And there are other Republicans who also think there should be actually more cuts to spending.
Well, we've seen some drama already on this point over the weekend, Kasia, with Tom Tillis announcing that he was resigning for facing off against Trump and being very vocal, saying that this bill is the equivalent of the ACA, of Obamacare, in terms of betraying the voter base. Kasia, he's just one who's willing to speak out so strongly because he is resigning. For the rest of this Congress, how much does Trump hold the cards? How influential is he able to be in convincing them to get this done?
Yes, exactly. So it's very tricky. Republicans only have 53 votes in the Senate. So this majority is very thin to begin with. As you mentioned, Tom Tillis, because he will not seek re-election, he doesn't have to vote for this bill. He doesn't have to support Trump's agenda anymore. So there is this one vote that Republicans will probably lose. They can only afford to lose 2 more. One of them could be Rand Paul, because, again, even though he was golfing with Trump over the weekend, he already cast 1 vote against this bill and is not very likely to support it. So now we are looking at only 1 more, and, this bill could be at risk.
All right, Kasia, thank you so much. That's Kasia Klimanshinska in Washington. Now, Elon Musk did slam the Senate's latest version of that multi-trillion-dollar tax bill, quoting on X, polls show that this bill is political suicide for the Republican Party. He is warning that the cuts to EVs and other clean energy credits would be incredibly destructive to the country. Joining us now is Bloomberg's Jamie Nemo. Jamie, just how big of a surprise was it to get some of these tax credits rolled out more quickly or rolled back more quickly? I mean, we heard there from the disagreement from Musk. Just how big of a surprise to the industry was it?
I don't think it was too much of a surprise, but it's certainly a big blow. I mean, EV demand everywhere is struggling at the moment. So the last thing they need is for the consumer incentives to disappear earlier than planned. I mean, you've seen the impact in Germany where that happened last year, and there was a real drop-off in demand, and that happened in the UK as well, where I am, pretty quickly. So you can imagine the sort of drop-off in demand there'll be in the US when these come into effect.
If it is Elon Musk that's hitting back at X, does he still hold to any political sway, Jamie? Will congressional leaders, will senators, will House of Representative members listen to Mr. Musk?
I think they'll certainly listen. I mean, it's fascinating, the sort of dynamic at play here. I mean, whether he has the sort of influence he had before is unclear, but he is still chief executive of Tesla, an incredibly important company, especially in the EV space. So what he says matters. Whether they listen or not is another matter, but he's probably correct in terms of demand and what might happen when it comes into play.
What does it mean for this EV sector, Jamie, if we do see that demand drop off at a time where demand has already been challenged for EVs?
Yeah, it's incredibly challenging. I mean, it's not just Tesla, everyone's struggling. I mean, the US has been slightly behind on the take-up versus other markets, so you can see how that would affect things going forward. It's just another sort of blow to the whole sector that you know, they've got import tariffs to deal with, the Chinese tariffs into the EU as well. So it's another sort of obstacle for them to overcome when they're already struggling to sell these next generation of vehicles, which are costing them a lot more to make already. So that's, you know, getting consumers to pay extra sums is difficult. So when you haven't got those incentives to entice them to make the switch in the first place, which is a difficult thing for people, you know, who might have range anxiety, they might be worried about the spending, you know, is it going to run out of charge, all those sort of things. It's just another obstacle that will prevent them from making the switch, and they'll stick to gas vehicles for longer, really.
Jamie, really appreciate your coverage this morning. That is Bloomberg's Jamie Nemo. Coming up, we're going to get you set up for your week ahead with central bank chiefs gathering in Portugal and the U.S. jobs report. This is Bloomberg. You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading week. The ECB forum will be kicking off in Sintra, Portugal today with President Lagarde, Chair Powell, and Governor Ueda. They are all set to speak throughout the week. Then on Wednesday, Tesla is expected to release its second quarter vehicle sales figures. And then June payrolls, it will come early. We'll get that on Thursday ahead of the July 4th holiday. The estimate for that is 113,000. Now let's take a look at some of the movers this morning. Tesla, we mentioned they're going to get some of their sales figures this week. It's the only Mag 7 stock, though, that's in the red this morning, down more than 1%. President Trump's landmark budget bill passed a key Senate hurdle over the weekend, and it included a quicker phase out of some of the EV and renewable tax credits. That's also why you're seeing companies like NextEra Energy, that's falling even more, down 3%. Renewable stocks in general falling. Meanwhile, Disney, those shares are up 1.8% this morning. Jefferies has raised it to a buy. The analysts there writing that they see a limited risk for a slowdown for the parks division and upside to the cruise division. They raised their price target to $144, trading at $124 this morning. All right, a quick check on markets as we head to the end of the hour. It looks like we are set for another all-time high in this equity market in the last day of the first half of the year. S&P futures up about 1/3%. Even with all of that, though, the dollar is still weaker. It is the head scratcher, as it seems investors are more willing to pile back into U.S. assets. Yields, too, those are lower. Again, bonds, we're willing to buy those, but dollar still weaker this morning. Okay, that's it for your Bloomberg Brief. Surveillance takes it from here. You're watching Bloomberg TV.